All right, today we're going to dig into one of the oldest, most debated assets on the entire planet gold. So, is it just a shiny rock, or is it actually the ultimate form of financial insurance for your portfolio? Let's figure it out. You've probably noticed this pattern, right? The moment stocks start tumbling and there's that feeling of fear in the air, the conversation somehow always circles back to gold. So, what is it about this ancient metal that grabs our attention when things get crazy? That's really the core question we're diving into today. To really understand gold's role today, we've got to look back. I mean, way back. Its reputation wasn't built in a day. It's been forged over literally thousands of years of human history. And that history, it's the key to why we still trust it. Here's the fundamental difference. The thing that really separates gold from, the money in your wallet. Governments can print more money, a lot more, and that can devalue it practically overnight. But you can't just print more gold. So when people lose faith in their currency, they've historically turned to gold because it's a real, tangible asset that can't be easily messed with. Okay, so let's break this down even more. When you strip it all away, there are basically 5 core reasons why investors still see a ton of value in holding gold. We're going to walk through each one so you get the full picture. First up, and this is arguably the most important one, gold is seen as a true store of value. Since it can't be created out of thin air by a central bank, it acts like a long-term anchor for your wealth, basically preserving its worth across generations. Second, it's often called an inflation hedge. Now, we got to be a little careful here. It doesn't work perfectly every single year. That's a myth. But over the long, long run, especially when inflation is really high or a currency is getting weaker, gold has a pretty good track record of helping you preserve your purchasing power. Third, it's a classic safe haven asset. During a crisis, I'm talking a market crash, a big recession, investors just flock to gold. And why is that? Well, for one, it's not tied to any single company's profits. And crucially, it's not someone else's debt. Its value just stands on its own, especially when fear is running high. And number 4 is a big one, diversification. See, gold often zigs when stocks and bonds zag. This is so important. When your stocks might be taking a nosedive, gold could be holding steady or even climbing. And that can really help smooth out the bumps and lower the overall roller coaster ride in your portfolio. This is probably the best way to think about it. Look, you don't buy home insurance hoping your house burns down, right? You own it for protection just in case it does. Gold pretty much serves the same purpose in a portfolio. It's there to protect you against the crazy, unexpected stuff. And the fifth and final strength is just good old-fashioned scarcity. Believe it or not, all the gold that has ever been mined in history would fit into a surprisingly small space. And the new supply from mining, it grows really slowly. This fundamental scarcity is a key reason it has such a solid long-term foundation for its value. Okay, so we've covered all the good stuff, but to get a really clear picture, we have to be realistic. Owning gold isn't some magic ticket to getting rich. It definitely comes with its own set of challenges and downsides. So let's flip the coin and look at the other side. So on the pro side, you've got that crisis protection, you've got the diversification. But on the con side, and this is a big one, gold gives you zero income. It doesn't pay your dividends like a stock or interest like a bond. It can also be pretty volatile on its own and can seriously underperform stocks for long stretches when the economy is booming. All right, now I want to tackle the single biggest myth that I hear about gold all the time. People will say, oh, inflation is rising, you have to buy gold. Its price is going to go up, guaranteed. But that is just a huge oversimplification, and honestly, it can lead investors down a really tricky path, because the reality is, well, it's a lot more complicated than that. So here's the crucial thing to understand. Gold's price is often way more sensitive to real interest rates, that's the interest rate after you subtract inflation, and the general level of fear in the market. It's not just a simple inflation calculation. Gold can go sideways for years. You have to remember, gold is for protection, it is not a growth engine. So, after weighing the pros, the cons, the realities, what does all this mean in practice? Let's talk about the how. How might someone actually strategically add gold to their portfolio? For most long-term investors, the advice you'll usually hear is a pretty modest allocation, typically somewhere in that 5 to 10% range of your total portfolio. It's not supposed to be the main event. It's meant to be that insurance component we were talking about earlier. And how do you actually buy it? Well, there are a few main ways. For most people, the easiest path is through gold ETFs. Those are exchange-traded funds that just track the price of gold. Simple. You could also buy stocks of gold mining companies, which are definitely higher risk but also have a higher potential reward. And of course, you can always own the physical stuff, coins or bars. Just a quick word of caution here, there are much more complex ways to get into gold, like using futures contracts or leveraged products. As a general rule, for most beginners, you'll want to steer clear of those, as they carry a whole lot more risk. So, after looking at all of this, what's the final verdict? Well, it really boils down to a simple but really powerful idea. You own gold for protection, not for aggressive profits. Here is the bottom line. The goal of owning gold is not to get rich quick. The real reason to hold it is to preserve the wealth you've already built, to lower your portfolio's overall risk, and to give yourself a safeguard against all those unpredictable economic and political events that are just a part of our world. Which kind of leaves us with one last question to think about. In this world of cryptocurrencies and super complex financial markets, is gold just an ancient relic? Or is it actually more relevant than ever? The ultimate financial seatbelt for the unknown road that's always ahead of us. That's something every investor has to decide for themselves. Thanks for tuning in.